All right, Bitcoin update. Well, looking at the week ahead, we're going to start off on the hourly. We're going to talk about throwbacks and pullbacks because a lot of people use those incorrectly. They're calling Ferraris Lamborghinis, and you don't do that. And you don't call a throwback a pullback. We're all guilty of it at times, but the more you learn, the better you get, the more money you can make. So let's look at it right now, and then we'll zoom out to the bigger picture and see what's going on with Bitcoin. But for the hourly, what is a throwback versus a pullback? And you need to be learning these right now, right? The bear market's where you need to be learning as much as you can. So you're better prepared for the bull market so you can make the most possible, right? Logical. So throwback, first of all, throwback is always done after you break out of a key level, right? Or not so key, but you break out and then you throw it back to test support, right? This is a breakout and a throwback. This is not a pullback. A pullback is the opposite, is when you lose, right? You lose support and then you pull back to now resistance. Previous support will flip to resistance. Resistance flips to support. Resistance flip to support. That's a throwback. Support breaks and flips back to resistance. That is a pullback. Pullback is from the underside. Throwback is from the top side. Remember it. Watch it again if you don't get it, right? If you get confused, throwback is from the top side going back to test. This is not a pullback, as most people call it, right? This is a throwback. So don't be that guy, right? There's a lot of people with hundreds of thousands of followers still use that incorrectly. Maybe you can find them. So having said that, now you know something a little bit, then maybe you didn't, or at least burn it into your mind a little bit more. Let's go to the daily, see what we got here. Without the rambles as much as possible. When you see moving averages going sideways, you can rest assured you're in the tar pits, right? What does that mean? We're going sideways, not doing jack all, right? We're at the same prices we were last week. We're at the same prices we were last month, right? We're just basically flat. So if you need to visualize it, draw a little rectangle, right? Rectangles are actual terms, and they are very difficult to make any kind of money out of. You want to break outside of the rectangle and wait for it so you can enter your entry stop, like right here. If you want it short, like 15.5, if we get down in that area again, then you probably start paying attention. Or if we get up to 17.5 again, then you might want to start paying attention, because it's on the opposite side of where we have been for the past month. Those are the big moves. You want to try to stack the odds in your favor, and the favor says wait for that, right? Patience can be the hardest thing to do, but the most profitable. So some of the best traders in the world take a handful of trades a month. Even the day traders, right? The best day trader. I'm talking day traders, not talking long-term investors that only buy once or twice every 4-year cycle. I'm talking about even the best day traders in the world are very patient and very disciplined. If you're trading off what you think will happen using your emotions, that is the wrong way to do it, and you will likely lose the most money the fastest way possible. You have to have a system and trade it in place. This is a good starter step. So, learning support and resistance, throwbacks, pullbacks, rectangles. Don't trade rectangles, right? Doing nothing for 30 days is difficult, but would you rather just get chopped out and lose all your money, right? That's more likely to happen if you're trading inside of rectangles. So having said that, we're in a rectangle on the daily chart, right? So let's remove that and let's zoom out to the bigger picture, the weekly. So you want to start in the shorter time frames and then zoom out, or start at the bigger time frames if you're a more hands-off investor, and then zoom in, to just as a general rule of thumb. Okay, so weekly. Now, if you're wondering what this is at the bottom, this is just volume, so you can ignore that some of the time, but volume can be key for reversal points. We can do that on another video if you'd like. So what are we doing on the weekly? We had a big drop down with a lot of volume, right? That's a little scary. And now we're just seem to be consolidating or resuming a continuation pattern. What's the continuation? Well, you fall down, you make this kind of like bear flag, bear pennant, and then fall down, right? You fall down, you make this, you're catching the drift here. We could be doing something like this and continuing back down again, right? That seems to be the odds so far. What we would want to see is a flip back up above, I would say, that zone. Anywhere in that zone, I would even give it a shot, right? Because that would also take out the EMA 8. 17.7, but really until we can start clearing like, 18.2, get us the price back into these candles, right? So put it on the closing prices. You can see that now that we must clear this zone if you want to remain or get more bullish, right? Otherwise, we should be remaining more bearish than not based on the downtrend, right? What trend are we in? There's primary trends and secondary trends. Primary trends in a bear market are down, right? What is the primary trend? The primary trend is that, right? The primary trend is this, right? But this is part of the primary trend. This is part of the primary trend. This is part of the primary trend. The secondary trend, it goes opposite of that. That's a secondary trend right there, right? So you can see that. You got a primary trend, which is the big one, and these follow the primary trend. These follow the primary trend. Secondary trends do the opposite, right? So we've had a couple of those. Or you could even argue that we're more or less going sideways now. And I could see that we're trying to kind of flatten out here, right? We're not going down, the black diamonds on the ski slopes anymore. We're trying to flatten this out. So drawings aside, that's where we are, right? Until we can close above the EMA8 and with conviction, right? You got to be leaning more bearish than not based on the facts, not what anyone's opinion is, what your emotion says. Based on the facts, we are under all weekly moving averages. Just based on that alone, you have to be leaning hands off for bullish momentum, right? So we have 0. So that's that. Where we've pressed outside the lower weekly Bollinger Bands. We're doing nothing more so far than just a rally, right? We don't see any facts for big bulls showing up, right? Big bulls are on the weekly chart, and we have 0. Maybe on the shorter time frames we can argue some points, but until the facts show up in the weekly chart, you should be a little bit more hands off. The boring. This is what bear markets do. They just bore you to death and think that nothing's ever going to change, and then all of a sudden at some point they'll come out of it and you'll doubt it, and that's by design as well. Market psychology is a hell of a thing. So that's where we are. Bitcoin update. Hopefully you learned something today. If you want to see something else, more teachings, leave me a comment. For the 4 of you watching this, I appreciate it. Keep it under 10 minutes. Quick, short, mixed words, made up words. I'll see you on the next one. What's your favorite altcoin that you want to see covered? Hopefully you're not in deep on too many altcoins right now. It's a little dangerous, but if you want to see one covered, I'm all ears, right? We'll try to do at least one video on YouTube every day for the foreseeable future. Once the bull market picks up again, maybe we'll do some more live streams when we get some pickup. Maybe we'll do a couple YouTube videos a day, when there's a need for it. But it's just, there's like a fraction of people still here. So if you're still here trying to learn, then, kudos to you. High fives. I took CMT test for the one of you that are still watching last week on Friday. So I know I haven't been doing a whole lot, but I've been studying for like hundreds of hours. Not hundreds, but I would say about 100 hours for the CMT test, the chartered market technician. Not a handful of people do that. There's not a whole lot of people, certainly on YouTube, that have that kind of degree. So basically that's just, it's a certification that you can read a chart. So we'll get more into that. We'll relay better educational content so you can become a better trader, and maybe I'll get more than 4 people watching at the end of the video. So thanks so much for watching this long if you have, and don't forget to hit the like button. It helps spread the video content if you liked it. So thank you. I'll see you on the next one. I think we made this is like 650 videos right here. 650 videos. All right. You have nothing to show for it, Chase.